Hello, hi everyone, this is Giacomo, and today we are going to do a backtesting of a famous portfolio, which is a Boglehead three-fund portfolio. We are going to use Awalit as backtesting platform, which is our platform and use daily historical prices, which for us is better to understand well what will be the max drawdown and the volatility and performance of this portfolio. So the first thing we are going to choose this tool, which is our backtesting. Then we are going to create this portfolio. We already created it before, which is the Boglehead three-fund portfolio. We are using this allocation, which is a moderate allocation, considering 50% in BTI, which is the US total market, then 30% of US bonds, and 20% of international exposure through VXUS ETF. So you can see here that we created already this portfolio, which you can also analyze with our AI that goes into the real portfolio. Then we are going to create configuration for this backtest. So we will call this backtest as Boglehead pre-fund, and we will choose this portfolio. So we can see that because of VXUS, we will limit our range to 2012, from 2012 to 2026, and we will use a constant mix strategy, which is with 0% of tolerance, which is a strategy where we will choose every 1 year, the portfolio is rebalanced and the allocation will be the same of the initial allocation. So this is a way of rebalance the portfolio. Then we will use as benchmark the S&P 500 and we create the configuration. Then we will launch this first backtest. So we run the backtest. And here in this dashboard, we can see already the first results of this backtest. We can see the return is 225% in these 14 years. But then we are going to see all the results. So in the result history, in these results, we have we can see again all the configuration. We can see the portfolio that has been used. And this portfolio is starting with $10,000 with 3 assets. Then we can see the actual performance of the portfolio. So the performance says that I will reduce the size. Then we can see that there is the total performance. There is the annual return in terms of compound annual growth rate of almost 9%, which is a good, let's say, a moderate to good amount, and with a max drawdown of 24%. Then you can see the performance of this three-fund portfolio and the performance of the S&P 500. Obviously, the S&P 500 has performed much better. So you have an outperformance of 277%. But of course, you can already see from the graph that the volatility of the S&P 500 is much higher than the volatility of the Boglehead three-fund portfolio, which is 12%. Consider that the volatility of S&P 500 has been of almost 18 to 20%. So the max drawdown for this portfolio has been in the COVID, as you can see here. So as I said before, using daily historical prices is better to understand, to see all the performance and the whole volatility of the asset, of the portfolio. While in 2025, during the tariffs period, there was this drop in the S&P 500. This has been not so high in this portfolio, as well as the 2022 bear market. Here there are other risk metrics. Then you can see every year what has been the rebalance. So the rebalance history, as you can look at the rebalance history here. So we put a 0% of tolerance before in the configuration. That means that you can every year the portfolio has been rebalanced every year for each percentage. So it says you what has been sold and bought to have the same initial allocation. You can see here all the history that is provided by the Awalit engine. So usually you can see that, for example, every year you can see the same allocation. So usually what happened in the periods where S&P 500 was the VTI, the US market was performing more, you can see that the allocation was shifted towards the US market. And then to rebalance well the portfolio, you need to sell some percentage of the US market in favor of the other two assets. You can see that also some yearly metrics, for example, for the annual return and for the volatility, as we can imagine, the 2020 has been the most volatile year for this portfolio, but I think for most of the portfolios. Then you can see also the Sharpe ratio and the max drawdown, which was in 2020 and 2022 of 22%. And you can see also this table here. Then let's have a look at the correlations. So I think one of the most important things to understand in a portfolio, to design your portfolio in a backtest, is to understand in different market phases how was the correlation between the assets. So just to give you an example, we will look at the 2022, year 2022. We used to design the correlation matrices in quarters, because that's what has been said by the literature. So literature, the financial literature says that you need to observe quarterly the correlation, which is better because then it allows you to have enough point of enough prices to describe this kind of correlation. And also because the correlation can change during the years. For example, we know that historically bonds and the stock market they go in opposite side, which is good. And that's what happened, for example, in Q2 2022 with a correlation of minus 38. To give you an idea, when you have a correlation of -1, it means that the assets are going completely in the opposite direction, which is good for a portfolio, because if an asset drops, the other asset you want it to go up. While let's see in Q3 2022, we can see that there is a very high correlation between VXUS and VTI, and there is also a correlation between VTI and bond, which has been something rarely happening in bear markets. So this is something that before wasn't happening. Also in Q4 2022, we can see, for example, also in Q2 2020, no, Q1 2020, which should take also the COVID. You can see that BTI and bond has zero, the correlation is zero, which is good, which is something that helps the portfolio. And then what we can do is also, now we are going to see also the AI summary. So for Awalit, we have designed the AI using an LLM, internal LLM that goes and reads the real results of your backtest, of the true backtest. So it is important, it is different because it doesn't have the hallucinations that usually AI have. So I will generate the AI summary. It goes into the performance, it goes into the correlation matrices, the historical performance, the benchmark. So it can tell you what is the overall rating. So we can see that the overall rating of this portfolio from this AI assessment is 8 as an overall, and the risk profile of 8, which is, we can see that the strength of this portfolio is that the lower risk profile with this analyzed volatility is lower compared to the benchmark that is, as I said before, around 18, but it's actually around 17%. Better drawdown, better also the bond component has a negative or low positive correlation with equities. Then the weaknesses of this portfolio are that, of course, the returns are much lower than the benchmark. There is a high correlation between VTI and VXUS, and the correlation between equities and bonds in some years, for example, in 2025 Q1, has been high or higher than zero, as we said also in Q2 2022, which means that this asset didn't do the job that it was supposed to do. There are some insights, and there are the allocation analysis, the correlation analysis, and the benchmark comparison. So this was let's say, the full back test of this Boglehead 3-fund portfolio. This was also our first video. So I would say sorry for my English or some, I didn't prepare this video a lot, so I wanted to analyze it with you. And just some words about Awalit. Awalit is a platform that I said has been designed with these four features that you can see here. At the moment is in a pre-launch period. The launch will be coming soon, probably in almost 2 months. So you can join the wait list to access to this pre-launch price, which will be $79 per year. And this price will be dedicated only for people that will join the wait list. So I will leave also the link in the description. And thanks for watching.